everyone, welcome to this afternoon's webinar, or at least it's the afternoon here in the UK. I know we have lots of visitors from Canada, the US, all sorts of places. So whatever time of the day it is for you, it's lovely to have you with us for this session. And as you can see, I was waiting to sort myself out with the disclaimer, which I have done so now. And before we start, as always, may I draw your attention to the disclaimer that I know you can see on your screen. Please, don't ever use money that you cannot afford to lose if you are thinking of trading, because it can be a very risky business. And I've actually said that the wrong way around, so do forgive me, but I will say it again. Trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Okay, for those of you who are maybe with us for the very first time, we will be looking at some charts. Including some forex charts. We'll be looking at the indices. I'm not sure, I think David's going to be looking at commodities as well, but whatever chart we're going to be looking at, we're going to be looking at it through the prism of volume price analysis. I know many of you who come along have either read the book or you bought some of our indicators, and I know we've got some of our forex program students here. It's a methodology that looks at price action and volume being activity, participation level, and basically the two have to be in agreement, because what that does, if it's in agreement, it confirms that what we're seeing on the chart is actually a genuine, valid move. Oh, excuse me, in my left ear, I've got an alert system on one of my charts, but I know you can't hear it. It's only me, but it caught me completely off guard then. Volume price analysis, much better for you to see it in action at the live edge of the market, and we will do that for you as the session progresses. But if it's something that you've not come across before, all detailed on various books that are on Amazon. This is the first book. It kind of lays out the methodology. It draws its inspiration from a lot of the work that was done by Richard Wyckoff, and certainly we apply Richard Wyckoff's 3 main rules. And again, the way to understand this and see this is to actually see this in action, which we will do as we progress through the webinar. And the great thing about this methodology is that you can learn it on the faster timeframes, even if you don't particularly want to end up trading the faster timeframes, because price action is self-similar anyway. The quickest way to learn it is if you've got the book, fine, have the book. If you're in the program, there's masses and masses of information on the methodology there. You then take it and you just apply it to the chart, as I said. And one of the reasons we look at maybe the faster time frames is because we want to see the price action develop quickly for you attending the session with us. But it works equally well on the slower, the higher time frames, the slower time frames, which is why you can use it not just for trading, but also for investing. What we've also done with that book is there is a companion book, which basically has some worked examples. I think it's 200, again, drawn across all the time frames to show how you can apply the methodology. And the great thing about this is, markets are cyclical, patterns repeat on a chart. And once you recognize what you are looking for on the chart in terms of what we call anomalies, candles, candle patterns, support and resistance, you see it once, you see it the second time, you see it the third time, and you will begin, the chart will be, you won't be confused. You will probably have a very good idea of what is going to happen next, which is really all we need to know as a trader or investor. This companion book really covers stocks, indices, and commodities. If you're predominantly interested in forex, there is a forex version as well. I think that's got just over 100 examples rather than 200. But enough of that, let's just go straight to the charts. I've actually got NinjaTrader up at the moment. In this session, we tend to focus on MT5 and NinjaTrader. I will be going to MT5 later, because MT5 is a multi-asset platform. Not everyone has access to Ninja. With NinjaTrader, you do have to pay for the data feed, whereas if you have an account with a broker that offers either MT4 or MT5, the feed is included, the data is included as part of the platform. You don't pay for that, but you obviously have to pay through the spread that your broker quotes you. But in terms of feed and access to markets, when we go and have a look at my MT5 broker platform, there are hundreds and hundreds of assets, shares, indices. They're kind of synthetic contracts of things like the futures contracts, the indices, gold, oil. So there's no reason for independent retail traders to access these markets at every single level. You don't need the huge pockets that, deep pockets that possibly you needed to have years ago. You can enter these markets with a very, very small amount, and you should only enter with a small amount, not because you may not have the money at your disposal, because what you need to do when you start is an awful lot, first of all, of learning, but secondly, you have to establish whether this is actually, you are suited to it, you are suited to the market. And because at the end of the day, you will succeed in this market if you can take a loss, if you can accept that part of trading and investing is being able to take a loss. Now, with volume price analysis, the idea is that we keep those losses to an absolute minimum. I had a tweet actually came through my my Twitter feed the other day, and I'll see if I can find it for later on. I must tell you, Goldman Sachs, God love them, one of their vice presidents, or he is a vice president there at the moment, has written a new book about the market and market cycles, and how, in order to succeed, you really need to understand market, how price cycles, which is what Wyckoff explains as well. And that once you understand this, then there's no reason why you can't be successful. The problem is that most traders and investors, they buy at a top and they sell at a bottom, encouraged by market makers such as Goldman Sachs. So at least with volume price analysis, what we try and do is actually point out where are we at a top? Are we at a distribution phase? Is it time to buy? Is it time to step aside? Is it time to step aside, or is it time to maybe wait because there is a reversal coming? Now, that cycle happens in all time frames, and in fact, before I go on to the onto cable, I just want to give you a perfect example of that. David's got this up on the faster time frames, and he will go through this in more detail. But this is the NQ, obviously the index that everybody is talking about, because it just keeps on moving higher and higher and higher, and it just seems to be unstoppable at the moment. But like everything else, everything comes to a point, a pause point, a potential distribution. And this is where we have to look at what is volume price analysis telling us, what are the levels telling us. We have an indicator which is based on Camarilla. It works in the values that the indicator will give you on the different time frames. They are different. It's not, so the intraday ones are recalculated every day. The ones on the daily chart are actually valid for the rest of the week, and the ones on the weekly chart are actually valid until the end of the month. So if we look at the values on the week, and this is what I actually said yesterday at Twitter, on my Twitter feed, is the NQ, because everybody wants to know, well, when is this going to stop rising? When's it going to come to a potential pause point? Are we coming to a reversal? And I can assure you, when most traders, when they see a market that is in this with this kind of uptrend, a lot of them will be thinking, oh, it's gone up, 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 or must be time for reversal, must be time for reversal. And their natural instinct is to say, well, where can I short it? Where can I short it? And of course, they try shorting it. Maybe they have a good day, like a good week, like I had here. But essentially, you are going, you're standing in front of a runaway train. But as I said, everything comes to a pause point, and this is where we look at volume price analysis and levels and candles and candle patterns. And what struck me about the levels on the NQ is that on both time frames, the higher time frames of both the weekly and the daily, we are at this key, what we call the fourth resistance on the Camarilla, and it's around 10.7. So I said, look, it doesn't mean it's not, it has actually punched through and pulled back, but these are two very, very key levels. The levels may hold, they may reverse, or it may go on higher. But what's interesting, if we look at the volume underneath the weekly candles, they are anomalous. You can't get away from the fact. Look at the spread of this candle. It's a very, very wide spread. Look at the volume underneath it. That is not congruent with what you see under there. The volume under this one is a little bit higher, but the spread of the candle is narrower than this one. These are the types of signals, signs that we're looking for when we look at charts through the prism of volume price analysis. This is on the weekly chart, but you will find exactly the same examples on the faster time frames. On the daily chart as well, where we had a nice up candle here, reasonable amount of volume. We had a more compressed candle. We had weakness in that candle with a lot of volume going underneath it. But this is the most interesting one. This candle is half the width of that one, but it's got exactly the same amount of volume. So what you're getting here, you're getting a lot of effort to push that price higher, but it's not responding. Now, it has responded today, but what we're actually looks like we're ending up with is a doji. Now, a doji is not necessarily a candle of a reversal. Sometimes a reversal does happen after a doji. It is a candle of indecision. The markets are, how can I put it, they're undecided primarily because of the virus. Is there a vaccine coming? Cases are rising, but thank God, deaths aren't accelerating at the same rate that the cases are rising. And I'm talking about the US at the moment. Here in the UK, well, certainly, things seem to be under control. Everything appears, moving towards opening up, but who knows what is going to happen. This awful virus has not gone away. Is there a likelihood that it's going to come back later on? Chances are quite possibly. The only difference between any second wave that comes along and what happened the first time is that at least the medics, the doctors, all have a better understanding of how to deal with it, because until there's a vaccine or the thing burns itself out, that is where we are at the moment. So that's what I wanted to say as an introduction. I do want to go back to the Forex, and in particular to the British pound, because I want to cover one of the questions that all day traders have. If you're a stock trader, and if you're in or Forex, where you have a market where you have multiple choices. Obviously with stocks, you've got thousands to choose from. How do you actually hone in? I'm not going to do stocks today. Stocks is something we're going to be doing later on when the TradeStation platform comes on board, because there is a screening feature on that platform, which is called Radar Screen. The screening factor that we have put into Forex is some of our own indicators, although we are looking also possibly to come up with another scanner to support that. But we do have indicators that help us with the screening process. And anyway, in the Forex, I only look at 28 pairs, and I narrow that even further down by looking at a particular currency and 8 pairs. So that's how I concentrate my focus, if you like, in Forex. You don't have to do that. There's all sorts of reasons why I'm looking at the British pound, particularly this month. But as I said, screening, weeding out, trying to find day trading opportunities. Particularly if you're a stock trader, you are going to have to look at this kind of scanning process, and that's something that we'll be looking at, as I said, once we have TradeStation on board. I'm just going to pass over to David, and then when we come back later, I'll go through the my British pound, and particularly with cable from this morning, and then answer any questions that you might have on anything we say, any of the indicators that you see on your screens, on the charts, and also if you've got any questions about volume price analysis, I'll be more than happy to answer them for you.